Hello, trading is closed on November 30th, 2017. Yesterday we said the most likely thing was a gap outside of the day's range, which we got. We had an optional target, 26.3352, that defined the low. It's a support resistance level. Here it proved to be support. We had a pattern with an early low. Tomorrow's pattern is the one with the early high. Doesn't preclude gapping down first, and whereas typically it rallies into the close, when it doesn't, it tends to go in a straight line move down, and it wouldn't take much for that to happen tomorrow. Here's the MEJT systems software. We got a sell signal. The S means it's strong. 3 gives the reason. The system said if the move is immediate, it should hit this target, which it did right on the nose. This falls within the parameters described in my book as a direct hit. Direct hits lead to moves 8 to 10 points in the other direction. This was just under 9. It isn't obligated to stop there, but it often will. And based on futures action, that high is going to probably hold. I don't have anything unresolved from MEJT, so let's look at some other stuff. Once again, we gapped up, hit new highs, couldn't hold on to any of them. The markets repeatedly confounded this signal by gapping up, promptly taking out this high, which invalidates its negative implications. However, I don't think that's going to happen tomorrow. It isn't just the futures action. This number is a direct hit of a number of a system devised by a friend of mine. If this holds, it could lead to a pretty strong move down. There's also some Fibonacci stuff we should look at, which is pretty amazing when you look at it. Well, this is the count I've been using. I had wave C way up here, or certainly not over there, but this isn't the only count. There are any number of ways to count this. What if brown A doesn't end here? What if this is A, B, C, and that's brown A? Then you get a different picture. Well, if that's A, and that's B, then brown C equals half of A right at this high. You've got blue C with the Fibonacci ratio to blue A, and you've got a clear 5 waves up right at the high with wave 5 having a fib relationship to wave 1. I'm always a bit leery when there's a bar completely over the upper Bollinger Band, but I'm particularly leery of rallies like this when we get a bar over the upper Bollinger Band and long-time market leaders don't participate. Here's NVIDIA, one of the all-time winners. It's dropping. This was yesterday's big surge up, and it fell. It didn't recover today. NVIDIA, overstock. Look at these moves in the market breaking out to new highs of big leaders. PayPal, you got a whole bunch of stocks like this. Now, I was looking for higher prices, and there are other prices that work. In particular, I liked 26.66 in January because I would have all 13 of the bars of a combo sell signal. But the last bar doesn't have to obey all the rules. Anything other than really gapping down dramatically will be good enough for bar 13 for me, and bar 13 can finish early. It isn't enough for me to want to sell because this thing has failed too many times. But if it works, and we don't know that yet, but if it works, on a monthly chart, it can lead to very big drops. Let's go back to the beginning of the rally, which has led to a quadrupling of the market in a little over 8.5 years. Everyone pretty much agrees that's wave 1, and that's 2, and that's 3. They all have Fibonacci ratios to each other. There is disagreement about the other waves, but I think this is A and B. And if it is, and wave C corrects here and doesn't undercut this, wave 4 is a perfect 78.6% to wave 3. They're all related right at this high. So, for tomorrow, the pattern is usually positive, but when it's bad, it is horrid. Anything other than having a gap and probably taking out this high should lead to lower prices. And while a recovery cannot be ruled out, we have to see what happens in the early trade. If we start moving down sharply, particularly if we gap under this low and start moving down sharply, there are a number of reasons to think that this decline, should it occur, is going to last for quite some time and be quite tradable. And that's today's call.